Once the storm clears enough that investors start to look for opportunity again, I think the green revolution drivers of the copper, silver, uranium, nickel market are just undeniable. Like, we are just dramatically short of those metals for the paradigm shift in demand that greening of the world is creating. And so I think there's a huge opportunity in those metals on the other as we exit this storm.
Hey everybody, welcome back. My next guest is Gwen Preston. She is the publisher of Resource Maven at resourcemaven.ca. Gwen, welcome.
Thanks so much for having me.
So I was looking at your website, and you have a couple of different things, a weekly newsletter, but you also raise money from accredited investors for companies, and I'm curious, how does that work? Do you actually get a finder's fee? How do you choose the companies? How does all that work?
So my business model is totally focused on subscribers. So that's who pay me. They subscribe to my weekly newsletter or to my premium service. And the premium service is a way that accredited investors, people who are interested in participating in financings, can get access to my network and knowledge, which is how I find financings that I want to invest in. So they're very parallel. The newsletter is about what I'm buying and selling in the market, and I write about it. So if subscribers want to mimic that or, pay attention, that's what they subscribe for. The premium side, the financing side, is when I find a private placement that I think has good potential. I secure a large enough allocation that my premium subscribers could participate alongside if they want. I write a note explaining my investment thesis for that, and I let them decide. And if they want an allocation, they let me know what it is, and I just sort of divide up our chunk amongst them pro rata. And then I connect them with the company, and that's that. I do not make money from companies when I raise money, because that would motivate me to offer financings for the fees. And that can't be the motivation. The motivation has to be to find good financings because I like them as investment opportunities. And therefore, I think my subscribers might like them as investment opportunities. So it's all just about finding opportunities in the market and sharing those opportunities and ideas with the people who follow me.
On the newsletter side, what are you covering lately? What turns your crank? What floats your boat?
There's downside risk in the near term. I mean, in the stock market as a whole, I think the odds that central bankers are tightening the world into a recession, I say the world a bit broadly, but you know what I mean, is very high. And therefore, I think there's more downside ahead, especially on the base metals growth side of the mining world. On the precious metals side, gold has done very well through all of this mayhem of the last little while, the transition into tightening and all of the questions that are associated with that. Of course, gold stocks will still decline some if we do have another big down leg in the stock market, which could well happen, as recession sets in. Once the storm clears enough that investors start to look for opportunity again, I think the green revolution drivers of the copper, silver, uranium, nickel market are just undeniable. Like, we are just dramatically short of those metals for the paradigm shift in demand that greening of the world is creating. And so I think there's a huge opportunity in those metals on the other as we exit this storm. I could talk about that for the next hour. So that's where I see opportunity. I'm not buying it today, but that's what I'm looking for as things that I will want to own as we exit this storm.
Goldman Sachs came out in a note 2 weeks ago and said that the bull market in the battery metals had run its course for now. And Goldman Sachs being Goldman Sachs, they essentially catalyzed a major sell-off across lithium stocks and lithium futures. And so I'm curious as to how do you feel about that? I look at the divergence between supply growth and demand side growth, and supply growth is growing at 3 times supply side growth. And so how does that work? How has the bull market run its course in battery metals? It makes no sense to me.
There's always going to be volatility when a market grows that dramatically, right? Mm-hmm. And so Sure. Do you want to buy lithium when it's priced at $60,000 a ton? Maybe not, especially with a recession coming, and especially given the fact that people trade markets partly based on the big picture. Whether that makes sense or not, if a recession's coming, they might sell their lithium stocks, either because they're up or because they think that lithium has some downside ahead because of the big picture. Sure. Copper is another really good example of that. In 2.5 years, we are facing the largest deficit the copper market has ever faced. There has been no supply response in the copper market to the fact that this deficit is just like right coming up in our faces. There's been no supply response because investors haven't been interested, so there hasn't been capital. They've been distracted by a stock market that was handing out returns left and right, so they didn't need to care about copper. Management at major mining companies has been very conservative. They've been focused on buying back stock and paying dividends. And permitting of mines takes forever now. So there's been no supply response to this deficit in copper. And so, copper is not fungible. We can't use something other than copper. Copper is essential for growth. And we're going to run out of it in 2.5 years. Not run out, but we will not have enough. And yet the copper market is, trending down right now. Why is that? That's because copper is traded as a moment-to-moment reflection of the global economy. That is how copper is traded. And so, contraction in China based on COVID lockdowns, based on the fact that we're going into a recession, that's what's influencing copper right now. Do I like that? No, I wish that the copper market had a bit of vision, because the opportunity in copper here is dramatic. But because the copper market is traded as part of the big market, we are going to have to basically run out of copper before the market really responds. And when it does, I think the response is going to be hard to believe how strong the response will be. So I think that's what's going on. It's the influence of the recession thinking, the lockdown thinking, all of this. It definitely can pin down markets in the moment, regardless of the medium-term fundamentals, right? And so that fits with what I said earlier, I don't know. I'm not buying anything right now because I don't know what's going to happen tomorrow.
Sure. And tell me about your theories on uranium. I was impressed with that just because, you see and hear a lot of debate and controversy around the idea of nuclear power and the costs associated with it. So, you see I've been in the uranium space, peripheral to it for so many years, and the favorite line of every uranium promoter under the sun is, there are over 400 nuclear reactors on the drawing board around the world, and they're all going to get built, and we don't have enough uranium. And it's like, yeah, okay, that was true in 2008, and it was true in 2012, and it remains true for the most part in 2022 that there are still 400 nuclear reactors on the drawing board, and only a very small fraction of them are actually proceeding to construction. So what is the thesis behind the growth in the price and demand for uranium?
The long and the short of that is, back in 2016, we were awash with uranium. There was way too much. Companies and countries had continued to just produce following Fukushima. So there was way too much in the spot market. And so we were in a terrible bear market for uranium. What's cool is that the uranium producers of the world really got together and said, we need to fix this. And so collectively, they reduced output at mines, they shuttered some mines, and then they started sequestering. So various funds or companies started buying uranium and just stockpiling it away. And that really soaked up the excess in the spot market. It took a few years, but it changed the supply side. We went from 200 million pounds of production a year down to 130 million pounds of production a year, like a dramatic decline in the amount of uranium that the world was producing. And so that really changed things. And then, of course, once the market started to turn, then we had the Sprott Physical Uranium Trust step into the mix. And they came in with scale. Oh my goodness. So they started with raising $400 million in an at-the-market financing. And within 2 months, they raised that to $1.3 billion. And within another 2 months, they raised their limit for financing to $4 billion. Whenever the market dynamics make it possible, they are buying uranium. They have bought oodles of uranium, millions and millions and millions of pounds of uranium over the last not quite year. And then if you want to get into real detail, then Russia controls a bunch of the facilities that we need to process uranium and turn it into nuclear fuel. There's conversion, where you turn it into a gas, and then there's enrichment, where you change the isotope ratio, and that's what you need to make nuclear fuel. And with basically trying to step away from uranium, or from reliance on Russia for those conversion facilities and enrichment facilities, means that we need more uranium. I could, again, go through that. It has to do with underfeeding these enrichment facilities versus overfeeding them, or going into overfeeding. It's just another thing that's requiring more uranium. The dynamics are pretty clear. Like the requirement is quite significant. And yes, it does feel a bit like the boy who cried wolf in the uranium market. But I do believe that we're on the cusp, like in the next 12, 24 months, of a significant move, despite what we've already seen, of a further significant move in the uranium market.
I really appreciate your participation today. Thank you so much for joining us.
Thank you for having me.
You bet. Bye for now.